I've posted a lot of charts using the Ichimoku Kumo cloud system developed by the Japanese in the 1930s. It's not very commonly used over here in the United States, but if you go to the Japanese trading rooms, I'm told, this is the system that they're primarily using to trade with. If you'd like some basic information in one page on how the system works, I found that this site is very good, fxwords.com. And go to Ichimoku Cloud, or just do a Google search for Ichimoku. But this one will explain to you what the basic system is. It'll give you the explanations of what each of the lines are. It'll show you some signals, strong, medium, and weak. And it'll show you what the formulas are for the various lines that we're using. I'm going to walk you through them now, and I'm going to show you how to use this in Thinkorswim, but if you're using a different platform, I'm sure you can find it. I use Ichimoku with different time frames, and here I've got a 4 grid set up with Thinkorswim. Just by selecting these 4, I could do more, but I just want to use 4. And I'm going to set it up for the sake of this demonstration looking at the weekly, the daily, the 1 hour, and the 30 minutes. This I'll do on a Sunday night. Later on in the week, I'll look at daily, 4 hour, 1 hour, 30 minutes. And then during the day, I'll look at 1 hour, 30 minutes, 15 minutes, 5 minutes. It all depends what time frame you're trading on. If you're a 5-minute trader, a 1-minute trader, or a swing trader that's trading on a daily basis or a 4-hour basis, you're going to choose your own time frames. For the sake of this demonstration, we're just going to look at one of these grids, and we're going to look at the weekly chart. So we go to Studies, and we say Add a Study. Go to All Studies, highlight the one that has I in it, which is F to K, and click Ichimoku. And you're going to get some standard defaults. I don't do anything different, and the books that I've read, and the one that I recommend is the one by David Linton. Very, very good book. Very easy to understand. You can read it in an evening. He recommends not changing the defaults. Let's go into the studies and let's edit the studies. Let's take Ichimoku and let's just change our line colors. Let's take the Tenkan-sen and let's keep it green, but let's give it a 2 thickness. The Kijin-sen, we can keep it pink. Let's give it a 2. And then the Ichimoku, very important. I don't like red because I use red for my 200 moving average. So I'm going to go to purple, your choice, 2, and apply. So now we can see our moving average lines a little bit better. Let me explain what each of them are. First of all, as I said, the Ichimoku Kumo meaning cloud, Ichimoku meaning at a glance. It's a system so that at a glance you can know what the trending direction is of this stock. And as the cloud shows you, the trending direction of this stock, FIV, is clearly up. Not to the same level as it was before. It's starting to slow down and perhaps top. Now the beauty of the Ichimoku system is that it's a forward indicator. Unlike all of the other systems that stop giving you data with today's candle pricing, you're getting data projected 26 periods ahead. So on a weekly chart, that's 26 weeks ahead. That's half a year. On a daily chart, 26 days. On an hourly chart, 26 hours. On a 5-minute chart, 26 5-minute periods. The Japanese developed the candle system as well. So if you're familiar with the Candlestick Theory, and you should be if you've gotten to this far, then that was developed by the Japanese. They've taken that further now and applied Candlestick Theory to the Ichimoku Kumo cloud system. The important lines are the top span of the cloud, the bottom span of the cloud. I'm not going to spend time on those. Go back to fxwords.com and read how those two lines are created. And then all you've got is just shading in between. You will see occasionally where the cloud goes from yellow to red. That's simply that these lines have become inverted, that the B span, the bottom span, has crossed over the top span, and the colors are going to be changed to red to indicate that there's been a crossover. Then when the cross goes back in the other direction, your cloud goes yellow. So you could be looking at a chart like this. That's red, yellow, red, yellow. The color doesn't make any difference. Don't pay any attention to the color. Red doesn't mean bearish, yellow doesn't mean bullish. Leave it at that. Color is insignificant, but it does help you to know which line is on the top and which line is on the bottom. The next one you want to know is your green line here, which they call the Tenkan-sen. That is a 9-period moving average. Basically, it takes, in this case, 9 weeks, 9 candles, 1, 2, 3, 4, 5, 6, 7, 8, 9. And it takes the lowest value and the highest value of those 9 candles and gives you a point in the middle right here, and that's today's point. Actually, yes, that's today's point. The halfway between the high and the low gives you the end of the Tenkan-sen. So similarly, this point was derived from the middle point between, obviously, this high and a low 9 periods back, probably here. The Kijun-sen is a 26 period, calculated exactly the same as the 9-period Tenkan-sen, but with 26 periods, the highest and the lowest, and the midway point of those 26 candles, and it's plotted here. Crossovers are important. The number 9 and the number 26 are what are also used in your MACD. Coincidence? Probably not. Different than the MACD, because here we're taking how you calculate your 9 and your 26 are different. They are averages of highs and lows. So the MACD has a different calculation, but still uses 9 days and 26 days. When you have a crossover of the 9 over the 26, that is a negative indicator, a bearish indicator. When you have a crossover, as you did here, of the 9 passing over the 26, you have a bullish indicator. Candles above the cloud indicate bullishness. If you have candles above the cloud but a cross below the cloud, that's a weak bullish signal. If you have candles above the cloud and a negative cross, that's a weak bearish signal. If this should come up, the Tenkan, and cross the Kijun again, when we have candles on top and a cross above the cloud, that's extremely bearish. That's a strong, bullish. That's a strong bullish signal. So what we had created here was a warning that we were still in a bullish trend, but we were going to experience a period of bearishness. And that's exactly what happened. Our candles came down, and the cloud acted as support. The cloud, these moving averages, are all, and the candles themselves, are support or resistance. In this case, we saw the cloud acting as beautiful, beautiful support for our FFIV movement up, and we now have a curl of the Tenkan-sen. And as the weeks go by, if this movement can continue, we will once again get a strong buy signal, bullish signal, and we'll be flying at a more rapid rate with FFIV. But right now, this is telling us that we're in a bullish situation. The Chiku span is extremely, extremely important. And what that is this candle, today's candle, its halfway point, plotted 26 periods behind. Right there, in this case. I'm not a good line drawer. So now we have forward indicators 26 periods ahead, which we haven't talked about. we have a lagging indicator 26 periods behind, and we have these two indicators that are based on 9 and 26 period moving averages. The Chiku span is important because when it is above the cloud, it's bullish. And it tells us that we have price crossing the cloud, confirmed by the lagging Chiku crossing the cloud, we have a bullish signal. This Chiku, 26 periods ahead, corresponded with that candle. That was our buy signal for FFIV on the weekly chart. And it was confirmed as mildly bullish by this cross under here. And that's exactly what we experienced. Pretty strong bullish period for FFIV. Now let's talk about areas of support and resistance. Much like an 8-period moving average is used by many people, or a 20-period or a 10-period moving average, where candles get support, in the Ichimoku system, it's the 9 that is our primary support. It's not as sensitive as the 8 EMA because it's a different calculation. So there's nothing wrong with having the 8 EMA on your chart, or your 10 or your 20, whatever you're used to. But keep an eye, Ichimoku-wise, on the green candle, the green line, and the pink line in this case, the 9 and the 26, being used as support. The Chiku is also support. And you can see where the Chiku came down and acted as support for our candles, and actually helped bring our candles up. So the candles came down, and both the Tenkan and the Chiku acted as support. The Chiku span running into this wall of clouds indicated a potential period of resistance where the Chiku had to make its way through this forest of clouds. And you can see what was happening with price at the same time. It was coming down. It was struggling because it was trying to get through these clouds. So if we were only looking at the chart on this day here, we'd have had the benefit of knowing this cloud up ahead was bullish, but we could have said, look, the Chiku is running into these clouds here, these candles here. We're going to experience a period of choppiness and difficulty. And that's exactly what happened in the future. So when the 26 periods moved ahead, we actually did see our candles experiencing difficulty, but the bullish signal was still on. So you want to look at the Chiku and see where it's going to run into trouble. And for price to continue to go up, the Chiku has to go up, because this dot, this point, reflects today's candle. So the next place that the Chiku is going to go, maybe it's here, can only be formed by a higher candle with a higher midpoint than the midpoint of this candle. So as the Chiku goes up, price is going to go up. But if the Chiku is to go up, it's going to run into these candles some weeks ahead from here. So we still have tough going before the Chiku can get through these candles, and then there's nothing up above, and then we're only looking at the cloud. It doesn't mean that the price isn't going to come down at some time, because by then these candles will have come up here, and the Chiku will be dealing with a new set of candles. So basically, that is a high-level, quick overview of the Ichimoku system. You still need to look at volume. You still need to look at other studies and other indicators, but you'll be surprised as you're working through your clouds how impressively accurate the clouds are for support. My favorite study is, let me just load the Ichimoku cloud. Now, let's go back to the week. And now let's look at FFIV on a daily basis. Totally different cloud system, but we notice here that the Ichimoku was resistance for us here. We didn't talk about cloud thickness. Let me talk about cloud thickness. Cloud thickness is important. When you have a very thick cloud, that indicates a lot of resistance. So as price was coming up here, it was meeting greater and greater and greater resistance, and it wasn't able to overcome that resistance, and it came down. It had a period here where the cloud was thin. If there had been any buyers around in any volume, that would have been the place to go up and pierce, but we didn't. We went through a negative period in the market, and certainly with FFIV after its earnings, and we came down to a low. Now that we're coming up, we tried to pierce the cloud here, almost, where there would have been fairly stiff resistance, and we were pushed down, and you can see that we moved along with the cloud. When we finally did pass through the cloud, we still had thickness to deal with. So it took time for negative volume to work off and for price to get through the cloud. The buying signal on a daily basis will be when the candles are above the cloud and when the Chiku span gets through the cloud. You can start to accumulate a little bit here, but your stop should be just below the top of the cloud. Because if we go up and the Chiku span runs into some resistance in the cloud and comes down, your candles will come down, and you're going to want to put your stop below the level of the top cloud span, because once it clears the top cloud span, it may very well come down to test the bottom before coming up through here where we've got some, we've got lesser resistance. Let's take a look at our next time frame. And let's look at the 30-minute. Let's look at the 15-minute. I'm trying to get a really good example for you. Here's an example on the 15-minute where we pierced the cloud. Here is when we came through the cloud here, this is where our Chiku span was. It wasn't until here that we broke it, corresponding to that candle, but we came down. We pierced the cloud and we came up again, corresponding to here, where we were getting support on our Tenkan-sen. That was your buy signal on the daily basis, because we had a forward moving cloud, we had piercing with the Chiku, and we had candles above the cloud. If we looked at our 9 and 26 cross, it occurred down here, so we had a mild bullish signal. We had the cross here, but our candles were still below the cloud. Certainly not a buying opportunity here. It was confirmed at this point. We can trade using the 1-minute cloud as well. Hope I'm not running out of time here. We can trade using the 1-minute. Obviously quite choppy, but the 1-minute works very well for you quick day traders. You can see how the cloud acts as support, acts as resistance in here. You can see where the the Chiku ran into this wall of candles here and had difficulty and started chopping about. So the 1-minute can be used as well. You're going to want to use your volume, but you're going to find the cloud is going to be an excellent indicator for you. If you're a 1-minute trader and you want to know, okay, I've broken the 1-minute cloud, I've got my 1-minute buy signal here, I'm going to buy. Where am I likely to meet resistance next? Where are we going? You can use Fibonacci's naturally, or you can simply go to the 5-minute cloud. No resistance from the 5-minute cloud. Let's see the 15-minute. No resistance on the 15. 30. No resistance on the 30. No resistance on the 1 hour. No cloud above on the 4 hour, but we have a cloud below on the 4 hour. So if you're a 1-minute trader, it looks like this is telling you from a cloud basis that FFIV has some upward momentum behind it, and that's certainly confirmed by this volume. So keep watching the daily videos where I'm going to explain using 1 or 2 stocks a day in how I'm using the cloud system for interpretation of my trades. But that's a basic overview of how you can use the clouds, but remember to use them on multiple time frames.